Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. First of all, thanks very much for tuning into my video, guys. It's really great to be able to communicate with all my bees community on a regular basis. Before I forget, don't forget to like and subscribe to this video. And also, I hope you like my 𝗳𝗶𝗀𝗲𝗄𝗃 t-shirt, and I'll be talking about him a lot later in this video. So over to what happened in the markets last week. So last week was a very eventful week in the markets, and we all know that last week was dominated on Friday when South Africa released to the World Health Organization that they had discovered a new variant in COVID-19. And this really caused the markets to crash on Friday. And a reason why this happens is that many people at the very beginning, they really panic and it starts to price in a doomsday scenario because people don't know how effective the vaccinations are going to be against the new variants. And also you don't know how contagious and how infectious this particular variant will be. And you don't really know the long-term effects in terms of, does it have a higher fatality rate, for example? But the initial readings are indicating that it should be effective with the current vaccinations. Although I'm sure a lot of the pharmaceutical companies are starting to look at this and see whether they can make tweaks to the vaccinations. And also it appears that it doesn't appear to increase the fatality rate. People in South Africa that have had this virus tend to have had it a lot weaker. So that is a good thing overall, but it does seem to be very contagious and even more contagious than the Delta variant. So the markets really kind of crashed last week on Friday. And the stocks that were hit the most were those that are in the travel and leisure sector, and also some of those higher risk play stocks and those that are sensitive to COVID-19 and the reopening of the economy. So really what I did on Friday was I reduced some of our exposure to some leisure and tourism and COVID sensitive stocks such as Cedar Point, which is a theme park group in the US, which is very susceptible if there's an increased case of coronavirus and they have to shut down their parks, for example. This could be very difficult for the company. So I really reduced our exposure in that great company. And also the other one was Aéroports de Paris, which is an airport group in France. And as we all know, the cases in Europe are increasing of the coronavirus, and also there is the threat of the new variant. So I thought it was a lot better to reduce my exposure in this company. Although I may, as things progress, I may look to buy it back again if things are looking better overall for the travel sector. I also made a few different moves in the market as well. In order to hedge the risk. I also decided to short the Nasdaq, which I do sometimes when I'm expecting that we might have some volatile times and there might be some downward volatility in our portfolio. This doesn't eliminate the losses, but it does help to soften them. I've also taken a short position as well in the Russell 2000, which is a small cap ETF, and I think it's very important to do this as well because quite often some of the small caps they tend to suffer the most during times where it's kind of a risk off period. So I also took a position in Hormel Foods as well, and this is a company which I thought was a really safe company to invest our money in, especially at this current time. Because what happens is Hormel Foods is they make a lot of tinned goods and tinned food goods, and this is very good because when there are periods of lockdowns like there is starting to be in Europe, people do start to buy tin foods from the supermarkets because they last a lot longer and they tend to store them in case things get a lot worse, or whether there is supply chain issues in terms of getting food to the supermarkets. And this did very well in the last lockdown as well. So I expect this to do really well coming up in the next few months at least. I also took a position which I've had for a little while, but I reopened it in a wheat short. Wheat is at all-time highs, and I think it's very overvalued at the moment. I took a previous wheat short about 3 or 4 months ago now, which was very successful when it also got overvalued, and I will write a post more on this in the future to explain my reasons why I think wheat is overvalued. I also added to our Stanley Black Decker position, and I did this again because I think it's a very safe stock. During lockdowns or periods where people are at home, and especially in the winter, people start to do a lot of DIY, and Stanley Black Decker has a really great range of products, and I expect them to do really well over the next 6 months or so. I already had a position, but I just increased it because I thought that this was a quite safe stock to go into. I'm going to keep a close eye on data that comes from medical professionals, and it's very important not to jump to conclusions and not to panic and to sell off all your stocks. What I'm going to do is I may make changes in the future based on the data that I see and make some tweaks to the portfolio, but it will be more of an evolution than a revolution, and I will keep my cool and my calm, and I will continue to add to positions in which I think that will perform well in the long term, but without cutting away future growth prospects that we have, because that's very important not to overreact. I'm also not ruling out taking further hedging positions if required in order to be able to ride out the volatility in the market. Obviously, this isn't the first time that this has happened. In March 2020, when the COVID-19 first came to prominence, it's caused a sharp sell-off in the markets because there was a lot of fear about what COVID-19 actually meant to the overall economy. And again, in June 2021, we also had the Delta variant, which many people panicked about as well, because we didn't know how this variant would pan out and how it would affect everybody's lives. And it's a little bit the same with Omicron. However, I think we are in a much better position than we were even during the Delta variant period, because now the global population is much more vaccinated. And this means that a lot less people should get sick from this Omicron variant, and this should put less of a burden on the overall health infrastructure in many countries. It doesn't mean that there's not going to be a lot of cases, but I do expect it to be less serious, and markets tend to react a little bit less the more times something happens. I understand that many of my new copyers who started copying over the last couple of weeks may be in a loss right now. And I think it's perfectly natural that people copy me when my portfolio is at an all-time high and markets are also at an all-time high. However, what I want to say that is it's not possible really for investors and also markets to continue to always be at an all-time high. We're going to have these bouts of volatility both up and down, and it's really important to stay patient and stay convicted, not only in your popular investor but also in investing in general. By moving between different portfolios, this is really a death by 1,000 cuts, and it's going to cost you a lot of money in commission. And it's more about time in the markets than timing the markets. And this is a very important mantra in investing. So please stick with me. I've been through many of these periods before where we've had dips in our portfolio. It's not just me, it's also other popular investors, and the market is heavily down. So please stay patient. And not only did crypto go down, as it is a risk on asset, and I will talk about this a little bit later in this video, but also the stock market went down around the world in all different geographical locations. Oil was also heavily down. So I think that although we were down for the week, I think that we managed to mitigate these losses as well as we possibly could. But I still think we are primed for further growth in the future. As we move on to the global market update, and I will start off with the US. As I've mentioned already, the markets were really dominated, especially later on in the week, about the new COVID variant called Omicron. And needless to say that many of the risk on assets and those which are COVID sensitive really took the deepest cuts on Friday last week, and value stocks tended to outperform growth stocks. Often value stocks are a flight to safety because they make up a lot of the necessity goods that we need in our everyday lives, whether we have a pandemic or not. However, of course, leisure and tourism stocks slumped the most, especially cruise liners and also airlines and hotels and other things that are related to the tourism sector. Another piece of news from the US is my man here, Jerome Powell, was renominated to be the head of the Fed. And this is after talk over the last couple of weeks that President Biden may have elected another person called Brainard, who has a very dovish monetary policy. And that's even more than Jerome Powell, who has been printing money at the speed of light over the last couple of years. However, Brainard was appointed instead as the vice chair of the governors. And this led a lot of people to believe, now that Jerome Powell has been renominated, that he is likely to speed up the tapering process. And this was reiterated in the November FOMC meeting by the Fed, in which many different people within the Fed said that they favored speeding up the tapering measures. And it will be interesting to see if this is still the case after this COVID variant, and whether this will have any effect on when they start the tapering. Last week, President Biden announced that the US were going to draw upon some of the strategic petroleum reserves that they have. This was not a surprise because it has been discussed over the last couple of weeks, and it was not a great amount. However, it didn't have the desired effect because earlier on in the week, oil prices actually rose. And this is mainly because there is an OPEC Plus meeting this week, which the OPEC committee will actually sit down with each other. And it is actually expected that those strategic petroleum reserves that have been withdrawn from the US, they're likely just to cut a very similar amount from the production quotas. So it's not going to have a big effect on the overall oil price. However, the COVID variant did put a spanner in the works on Friday, and oil actually went down about 10%. And this is mainly because oil tends to go down during these times of heavy COVID, because the energy usage and the demand is a lot less, especially if some of the countries go into lockdown. Also, some data released from the US is that jobless claims were at the lowest point since 1969. And obviously this is really good overall for the employment market in the US. However, it is important to note that this is backwards looking, and we've had a good period of time where the economies have been reopened and starting to thrive since May 2021. Again, we will have to watch how this COVID variant spreads around the world. There hasn't been any cases yet in the US, but 2 cases were identified in the UK. So it could be a matter of time before this reaches the US. So we will have to look at future data to see how this progresses. As we move on to Europe now, and last week the major indices in Europe were heavily down. And this is for a number of different reasons. So the first reason is obviously the new COVID variant called Omicron put a lot of fear in the market. The other reason was there was already a big influx and an increase in COVID-19 cases already throughout Europe, especially in countries such as Germany and Austria and the Netherlands. And this has caused a lot of the governments to start to put restrictions in place. And we've already seen that the Netherlands and Austria have already put in full lockdowns. And there are other countries as well, such as Germany, has started to put in steps that if things worsen, that they could get into a full lockdown scenarios. So this generally wasn't very good overall for the markets last week. We also started to see a lot of protests from countries that have put in new restrictions around COVID-19, such as Belgium, the Netherlands, and also Austria. So there is growing unrest about the potential threat for lockdowns throughout Europe, because quite frankly, many people have already had enough. There was also news from Germany that the Social Democrats leader Olaf Scholz would take over as the new Chancellor of Germany from Angela Merkel, and they would form a coalition government with the Liberal Democrats. Eurozone business activity also accelerated and we saw a higher PMI reading. However, it is expected that the PMI readings in the future months are likely to be lower because of all the disruptions in the economy due to increased cases of COVID-19. As we move on to China now, and last week the Chinese markets also slumped, and there was a number of different reasons for this. One of the reasons was that China and US tensions have increased over the last couple of weeks, and one of the reasons is because US has interfered more in the China and Taiwan sovereignty debate. And also the other reason was that the US last week also issued a list with 12 Chinese companies which have links with the Chinese government and the military. And this has offended the Chinese government and has soured relations between the two countries. Also, the Federal Communications Commission in the US also rejected a bid from China Telecoms to continue providing communication services in the US. And the main reason why this was rejected was that the US are very apprehensive about the ownership structure of China Telecoms, and they think that the Chinese government could get access to classified US communications. Chinese Premier 𝗃𝗂𝗃𝗀𝗃 also stated that China was going to step up efforts in order to stabilize both employment and financing in the country. And over the last couple of months, China has already put in measures to support the overall economy, such as providing accessible loans to small and medium enterprise companies in the country in order to recover from COVID, and also to increase the reserve ratio requirement for banks in order to put more liquidity in the economy. The property development sector in China also remains very tough. And the 𝗂𝗂𝗃 group, which I've talked about in previous video, who is very heavily indebted like Evergrande, have also announced last week that they were going to perform a bond swap. And they had over $59 million worth of coupons which hadn't been paid and which were overdue. And these were due to expire on the 11th and the 12th of November to be redeemed. However, there is a 30-day grace period. So many people are looking at whether they will be able to pay those bonds when the time comes. After the news of the Omicron COVID-19 variant was released late last week, Chinese pandemic advisors jumped in to say that they didn't see the new variant to be a big threat to China. And that is because they say that they've had very strict protocols in place and they have a COVID-0 policy in place. And they said that when many other countries were opening up, they stayed very cautious in order to stop potential events like this happening in the future. So we will see how tight the regulations are and whether Omicron actually makes its way into China, which I probably expect it will. As we move on to crypto now, and last week was a very difficult week overall for Bitcoin and crypto. And Bitcoin is a risk on asset. And I've said this previously before. And what that means is when there is panic, such as the COVID-19 variant, that this causes quite a sharp sell-off in the markets because people try to get as much liquidity as possible and they sell whatever assets they have available in their investments. And something such as Bitcoin is very liquid and easy to liquidate. So this caused a big sell-off overall in the market, and Bitcoin went down at one point to about $53,000. However, it has started to climb again over the weekend and is now sitting over $55,000 at the time of writing. However, this did not deter institutional investors, and as we know, institutional investors like to get a good deal, and they often buy when there's a lot of fear in the markets. And we actually saw net inflows of money into Bitcoin and Ethereum ETFs of $154 million last week to show that the institutions were really buying the dip. And also the president of El Salvador tweeted that El Salvador had added another 100 Bitcoin to its overall reserve, really showing that El Salvador had also bought the dip. Another big piece of news for Bitcoin was that in Singapore, the 𝗃𝗏𝗃𝗃𝗃 group were approved 2 Bitcoin ETFs in the country, which were approved by the Monetary Authority of Singapore. This is really good news because this is another benchmark, because one of the 𝗃𝗏𝗃𝗃𝗃 Bitcoin ETFs is actually a spot ETF. Very similar to the one that was just rejected in the US. So again, this puts more precedence for spot ETFs being approved in other countries. And hopefully it's only a matter of time before something is eventually approved in the US. Another big piece of news that happened was that Mercado Libre, who is one of the largest e-commerce companies in South America, has announced that they plan to allow Brazilian customers to be able to hold and store Bitcoin on their platform. And this is a very good test pilot because if it goes well, it could expand out to other countries that they service around South America and LATAM. Another big piece of news that was announced is that Odell Beckham Jr., who is an NFL superstar, has agreed to accept 100% of his salary in Bitcoin in the future. And this will be again using the Strike company, which is owned by Jack Mallers, using the Lightning Network. So this is another case and another piece of precedence where a major sports star is accepting his salary in Bitcoin. It was also announced that Moonbeam was the second winner of the Polkadot parachain auctions, and Moonbeam is a smart contract platform currently operating on Polkadot. Thank you very much for listening to my video today, and as usual, if you've got any questions, then don't hesitate to let me know. Also remember to join my Discord group where you can talk with many like-minded investors within our bees community. Thank you very much for listening today, and I look forward to speaking to you soon. Have a great week ahead.